Welcome, learners, to the deep dive. Our mission here is to cut through the noise, distill those key insights, find the surprising facts so you can walk away really well informed. Today, we're diving deep into the second quarter 2025 financial results for Agora Inc., a company, really at the forefront of real-time engagement, and now increasingly a key player in the AI revolution.
That's right. We'll explore Agora's journey to consistent profitability, their pretty bold and rapid strategic pivot towards AI, and what all these developments truly mean for their future path and, well, ultimately for you. It's a story of operational discipline meeting some pretty ambitious innovation.
So what does this all mean, and why should you care about Agora's latest quarter?
Sure.
Let's unpack it. We're going to kick things off with a quick but pretty crucial snapshot of Agora's Q2 performance. The headline here, and it's a significant one, is that the company reported its third consecutive quarter of GAAP profitability. For those maybe less familiar, GAAP profitability means they're profitable according to generally accepted accounting principles, kind of the gold standard in financial reporting. It's not just about cash flow. It's like a full financial turnaround from where they've been.
Indeed, and the numbers really back that up. They posted a GAAP net income of $1.5 million, which actually tripled the previous quarter's profit. Impressive.
Behold. Wow.
Yeah, and this translated to GAAP EPS of 0.01 cents per ADS, 1 cent per American depositary share. Handily beating the consensus estimates, too. Total revenue came in at $34.3 million.
Okay, now that headline revenue number, $34.3 million, might look like a pretty modest year-over-year increase, right? Just 0.4%. But here's where it gets really interesting, I think. If you exclude certain end-of-sale, low-margin products, basically, older stuff they're phasing out,
Right.
revenue actually grew a robust 11% year-over-year.
Yeah.
So what does that tell us about the quality of the revenue going forward?
Oh, it tells us a lot. This isn't just, percentage growth for growth's sake. It's a strategic cleanup. By shedding those lower margin products, Agora is deliberately prioritizing more profitable, sustainable growth over just chasing the top line number. It's a move that sets them up for healthier margins long term, especially as they lean into these higher value AI offerings we'll talk about. Think of it like pruning a tree to ensure stronger, more fruitful growth later on.
That's a great way to put it.
Yeah.
Beyond that, they also reported a strong gross margin, 66.8%. Pretty solid.
Very solid.
And significantly improved operating cash flow. They narrowed their negative outflow from last year's, negative $7.6 million?
Yeah, a big number.
Down to just, $0.4 million this quarter. I mean, that's practically break even on cash flow. And they're sitting on a healthy cash balance, too. $377.3 million in cash and equivalents.
Right, plenty of runway.
Okay, so let's unpack this profitability story a bit more. Achieving consistent GAAP profits like this, especially with that nuanced revenue picture, that's not easy. How do they actually pull it off?
Well, a key factor was just relentless operational efficiency. They've been really disciplined with expenses. Research and development expenses, for instance, decreased a significant 23% year over year.
23%, okay.
And general and administrative expenses were also down notably by 26.6% year over year. So this disciplined expense management combined with that expanding gross margin we just talked about was absolutely crucial. It signals, I think, a shift from maybe a growth at any cost mindset to something more financially sound, more mature.
Right, so they tighten the belt. Makes sense. Looking at their core businesses then, the Agora segment, that's their international real-time communication platform, right?
Correct.
It saw its active customer base grow over 12% year over year to 1,880 customers. And their dollar-based net retention rate stood at 97%. Now, for folks listening, a dollar-based net retention rate tells us if existing customers are spending more over time. Below 100% means maybe a bit less spending or some churn. So how does that 97% for Agora stack up? Is that good, bad? Okay.
Well, 97% indicates a relatively stable customer base. But yeah, with a slight churn or maybe some reduction in spend from existing customers, it means they're holding on to most of their revenue from existing customers, which is decent. But yeah, ideally, you want that number above 100% to show organic expansion within your clients.
Okay.
However, for their China-focused Shengwang segment, they had nearly 2,000 active customers, growing just 1.4% year over year. And its dollar-based net retention rate was 87%. Now that 87% is, more concerning on its own. But what's really encouraging, I think, is that both segments showed their second consecutive quarter of improvement in their net retention rates. So that signals they are sort of stemming the bleeding, making their customer base stickier. And that's a vital sign of underlying health.
Gotcha. So even with Shengwang's slower growth, the improvement in retention across both sides paints a picture of stabilizing, finding its footing. It's clear Agora has found its financial footing, showing impressive discipline. But a company like Agora doesn't just, rest on its laurels. This financial health gives them the launch pad for what many are calling their boldest move yet, diving headfirst into the AI revolution.
Exactly.
And this leads us directly to the strategic pivot. The standout development this quarter really centers on Agora's Conversational AI Engine, which they launched earlier this year.
Yep. And this isn't just some incremental update. It feels like a significant strategic reorientation. And they've moved incredibly fast on it. Just last month, at a major AI conference, they unveiled pretty substantial upgrades to this engine.
Okay, so what were those key features that really stood out? What makes this different?
Well, there were three primary advancements that really caught my attention. First, advanced attention locking. This lets an AI agent focus precisely on a specific user's voice, even with significant background noise.
Like in a noisy cafe or something.
Exactly. Think about trying to have a clear conversation there, normally impossible for AI. This feature basically gives the AI like a superhuman focus, which is crucial for continuous, coherent dialogue in real-world settings.
Okay, so it's not just hearing, but really listening in a noisy world. That's powerful. What was next?
Second was real-time vision-based intelligence. This enables the AI to understand visual context alongside the spoken conversation.
Oh, interesting. Like if I'm pointing at something.
Precisely. Imagine an AI agent not just hearing your question about, say, a building, but also understanding which building you're looking at or pointing to on your screen. It blends visual and auditory inputs for a richer, much more human-like understanding.
That sounds incredibly useful for practical applications. And the third one?
Third was natural interactive avatars. These synchronize lifelike facial expressions and body movements with the speech. So it's not just about sound, it's about creating engaging, relatable interactions. Really vital for things like education, customer support, maybe even virtual companions. It just makes the whole AI experience feel far more immersive and, less robotic.
Okay, these sound like capabilities maybe straight out of science fiction a few years ago, but you're saying they're already in play. What kind of real-world applications are we actually seeing with this engine? Are these just demos, or are they actually in production?
Oh, they are definitely in production. Agora gave some compelling examples. A major food delivery platform in South America, already using their AI engine to power agents making thousands of calls daily to restaurants, handling orders, queries, that sort of thing.
Wow, thousands of calls daily.
Yeah. And then there's Fuzzu, an AI companion toy developed by RoboPoint. It began shipping in July. And early data shows sessions with Fuzzu lasting for over 50 rounds of interaction. That demonstrates truly engaging, sustained conversations. So yeah, this isn't proof of concept. These are live deployments proving the engine's capability right now.
That's significant.
Yeah.
So these aren't just theoretical advances, they're driving tangible use cases already. And I understand the pricing model for this AI solution is also a potential game changer. How so?
Absolutely. Management stated the pricing for their conversational AI solution is expected to be an order of magnitude higher than their standard audio products.
An order of magnitude higher, so like 10 times?
10 times or potentially more, yeah.
Right.
This could unlock significant new revenue streams, especially when you consider their existing low-latency voice infrastructure as the foundation. They also anticipate gross margins for this new AI product to be at least equivalent to, if not higher than, their current RTC business, their real-time communication business, which typically fluctuates between, 66% and 68%, once it reaches a steady state, of course. But yeah, this combination of much higher revenue per unit and high margins, that's a powerful driver for future profitability.
Definitely. Okay, shifting gears slightly. Beyond the product, there were some notable organizational shifts during the quarter, too. We heard about the resignation of their Chief Technology Officer and Chief Scientist, Sean Zhang.
Yes, that was due to personal reasons, they stated. And the CEO has actually taken over those operational responsibilities, at least in the interim. Additionally, Tony Wang, who's the Chief Revenue Officer for the Agora division, and Jingbo Wang, the CFO, were both appointed to the board of directors.
Oh, interesting.
Yeah, it brings fresh operational expertise directly into the company's governance structure, kind of aligns operations and board oversight more closely.
Makes sense. And the company also adopted an amended and restated global equity incentive plan, expanding the share pool to, 50 million Class A shares? That sounds like a lot.
It is. And this move suggests, I think, a strong focus on long-term talent retention. especially as they push into these new high-growth AI frontiers. It's about aligning employee incentives with the company's future success in AI.
Right. Got to keep the key people motivated for this big pivot.
Exactly. So this raises the important question. What's the forward-looking picture then? For the third quarter of 2025, Agora anticipates total revenues between $34 million and $36 million, which represents year-over-year growth of 7.6% to 13.9%. So expecting that underlying business, especially with the AI kicking in, to start boosting top-line growth more meaningfully.
Okay, so growth picking up. And they're confident about continued sequential net income growth throughout the rest of 2025. That would mean, what, 4 consecutive quarters of GAAP profitability?
The plan, yeah. And they have a long-term goal of achieving an operating margin between 15% and 20%.
15 to 20% operating margin. That speaks to what we call operating leverage, right? As their higher margin AI solutions scale up, the cost of serving each new customer doesn't increase proportionally.
Precisely, meaning profits can potentially grow much faster than revenue. And that is what unlocks significant shareholder value over time, if they can execute.
Okay, now here's a curious point. Despite achieving this third consecutive GAAP profit, projecting strong organic growth, painting this optimistic Q3 guidance driven by AI, the market reaction seemed, well, cautious. We actually saw a notable drop in the stock price the day after the earnings call. So what's going on here? Why the disconnect between these seemingly strong results and the market sentiment?
Yeah, it's fascinating, isn't it? There's a clear divergence between management's extremely bullish tone and the market's immediate reaction. Management emphasized the significant momentum of the AI engine, the improving net retention rates, clearly signaling this strategic transformation.
Right.
But the market, perhaps more focused on near-term consolidated growth, seemed kind of fixated on that flat headline revenue number we mentioned earlier. Also, maybe the more modest growth from the Shengwang segment, and perhaps some uncertainty around the governance changes and that expanded equity plan.
So maybe a bit of a show-me attitude from investors. Like, okay, prove the AI revenue potential.
Could be. Waiting to see how quickly that order of magnitude higher revenue actually translates into the financials. It sounds like the market might be weighing those immediate consolidated growth figures against the longer term, maybe higher potential AI pivot.
Is this just typical market short-sightedness, do you think? Or is there maybe a legitimate skepticism about Agora's ability to really execute on such an ambitious pivot?
Well, it's probably a bit of both. The broader industry backdrop certainly shows rising demand for voice AI and real-time engagement powered by LLMs. That's a powerful tailwind for Agora. Their strategic pivot towards AI-augmented real-time conversation infrastructure positions them, I think, uniquely. Their existing low-latency voice infrastructure, their edge network advantages, that's their competitive moat. It gives them a distinct technical advantage that's hard for others to just replicate quickly.
Ah, right, because they built their own pipes, essentially.
Exactly. Unlike many competitors who rely heavily on public cloud infrastructure, Agora built its network specifically for ultra-low latency. And that's absolutely crucial for real-time AI. It's a strong, long-term differentiator, I believe.
Okay. So for those looking ahead, what are the key catalysts we should be watching for? Things that would show this pivot is truly taking hold and maybe gaining that market recognition.
Right. Well, the Q3 results will be a really crucial checkpoint. We need to see progress on the commercialization of their AI agent solutions and also continued stabilization, maybe even improvement in that Shengwang business. We'll also be looking intently for any announcements of, say, tier 1 customer wins or significant OEM or LLM partnerships tied to their AI engine.
Those would be big validation points.
Huge validation points. Also, continued share buybacks. They did $10.9 million worth in Q2. That signals management's confidence and supports shareholder value. But the long-term narrative really hinges on achieving that operating leverage we talked about as growth hopefully accelerates through these high-value AI offerings.
Got it. Okay, it's time for our This Is Not Financial Advice segment, where we pitch an outrageous but plausible trade idea based on today's deep dive. Remember, everyone, this is purely for educational purposes, definitely not financial advice. Consider this food for thought, something for you to mull over.
Okay. Well, considering the market's cautious reaction despite that strong underlying AI momentum and the company hitting GAAP profitability, here's an idea. A long-dated, deep out-of-the-money call option strategy on Agora shares.
Okay, break that down. Long-dated, deep out-of-the-money calls. Sounds complex.
Think of it like a low-cost lottery ticket, basically. You're buying the right, but not the obligation, to buy the stock at a much higher price than it is today. And long-dated means far in the future, say a year or two out. Deep out of the money means the purchase price, the strike price, is significantly above where the stock is trading now. Why? Because the market is clearly discounting that order of magnitude higher revenue potential from the conversational AI engine right now.
So you're betting the market wakes up to it later?
Exactly. We're betting on maybe a major tier one customer win or a significant LLM partnership in late 2025 or early 2026, something that would force the market to re-rate the stock significantly as it realizes the true potential of these higher value AI offerings. It's a high conviction asymmetric bet, meaning the potential upside is much larger than the initial cost betting on the strategic pivot finally getting that market recognition.
Risky, for sure, but yeah, the upside could be massive if that AI engine truly takes off and validates their vision.
Definitely high risk, high reward. Now, for those who prefer maybe a more hedged approach, consider a pair trade, long Agora, and short a traditional cloud-dependent real-time communication platform as a service competitor.
Okay, a pair trade. So betting on Agora relative to a competitor?
Precisely. You're betting on the difference in their performance. Agora's emphasis on its proprietary, ultra-low latency network gives it that distinct infrastructural advantage we discussed, especially as cutting-edge AI, like OpenAI's real-time API, needs that kind of robust audio infrastructure. It's not just a nice-to-have. So this trade plays the differential. Betting on Agora's superior core infrastructure and the market eventually appreciating that competitive moat in the evolving AI landscape, while maybe a competitor relying on standard cloud struggles.
Interesting. Playing the infrastructure advantage. And that wraps up our deep dive into Agora's Q2 2025 earnings call. We've seen a company achieving consistent GAAP profitability driven by sharp operational efficiency, and now this really bold strategic pivot into AI-augmented real-time conversation. It's quite a transformation, isn't it? From enabling simple video calls to powering AI agents that sound, look, and even understand context like a human, feels like we're on the cusp of something big.
Yeah, despite that cautious initial market reaction, the advancements in their conversational AI engine, things like attention locking, real-time vision, and those early production deployments, they paint a pretty compelling picture of future growth. Agora isn't just like adding an AI feature. They seem to be pivoting to become a foundational AI-augmented communication layer. That moves them beyond just being an RTC provider to potentially a critical piece of the next generation of conversational AI.
So what does this all mean for you, the listener? It means keeping a close eye on the commercialization of these AI solutions and how they translate into actual revenue as the year progresses. Can Agora execute on this ambitious vision and bring those order of magnitude higher revenues to fruition?
Yeah, the central question for the market really is how quickly will it fully grasp the implications of Agora's transformation? Moving from a general API provider to a leader in this specific AI-augmented infrastructure. Will that short-term focus on headline revenue give way to the long-term potential of the AI pivot?
We certainly hope this deep dive has given you a clearer, more informed perspective on Agora's latest results and their ambitious path forward. Remember, the information shared here is for educational purposes only. It is not financial advice. If you have more questions or topics you'd like us to unpack, definitely let us know.